Today, we're talking about the closest thing to a cheat code in high-volume insurance sales. Omar Elsayed, a 19-year-old insurance agent who started in January 2025 as an agent, has earned $580,000 so far this year in personal production and recently hit $100,000 in personal earnings in just 1 month. He did this by ignoring the complicated, outdated advice and replacing it with a bulletproof, intentional, and simple script. Most insurance agents, especially when dealing with aged leads, treat the phone call like a conversation. They're soft, they're nervous, and they're hoping the client will buy. Omar's approach is the exact opposite. He treats the call like a negotiation he has already won. In this video, I'm going to break down his exact telesales phone script and the 3 psychological strategies he uses to close deals faster and more consistently than almost anyone in the business. Omar's script is the hammer, and it's how he was able to earn $100,000 in just 1 month. But what about the 80% of leads that are cold, hesitant, or need more time that you don't close in one call? For that, you will want to stick to the very end of the video, where we will provide you that information as well. That info at the very end of the video will give you the 1-2 punch you need to close more sales. But first, we're going to cover the 3-second rule, how to earn attention immediately and take control of the call. The AAA method, the simple framework for crushing every single objection. The ice cream close, how to use pricing psychology to get clients to buy the most expensive option without arguing about money. This isn't about new tricks. It's about being fundamentally disciplined about the basics. After watching this, I guarantee you will think differently about the way you approach every single phone call. All right, let's dive in. First, we're going to cover the 3-second rule and the AAA method. The biggest mistake agents make, especially when calling aged leads, people who may have forgotten they even filled out a form, is starting soft. They sound unsure, and that lack of confidence kills the sale in the first 5 seconds. Omar's philosophy operates on a strict timeline: 3 seconds to earn attention, and 7 more seconds to build trust. If you don't earn their attention in the first 3 seconds, the aged insurance lead is hanging up because they don't know you, and they don't trust you. Strategy 1. The firm, authoritative opening. Most agents start with, "Hi, is John there? This is name calling about the final expense information you requested a while ago." That's soft. That gives the client permission to control the conversation. Omar's opening is firm, direct, and assumes the client is expecting the call. The key here is tone. It's not aggressive, but it is authoritative. Here's the structure he uses. John, this is Omar calling in regards to the final expense and life options. How are you? Notice what he does. Double name. John. It's a pattern interrupt. It grabs their attention instantly. Firm tone. He stresses that he is calling in regards to the options, not asking if they remember filling out a form. The quick check. He immediately moves to verify information to establish control. I was trying to get in contact with you in regards to the final expense and life options for seniors. I have your date of birth as this, and that. Is that correct, John? By confirming the date of birth, you gain a small yes and establish yourself as an official entity with their personal information, which instantly builds trust. After confirming their date of birth, then you would say, "Got it. Now it looks like you were planning on taking care of your funeral expense, correct?" Strategy 2. The agree, ask, and attack. The AAA method. Once you have their attention, the biggest hurdle is the objection. Newer agents panic when they hit one. Omar treats every objection like a minor speed bump, not a roadblock. He uses the AAA framework. The AAA method stands for agree. Acknowledge the client's concern to build rapport. Ask. Ask a quick question to clarify their true intent or to pivot. Attack. Hit them immediately, with a pre-written, confident response that moves the sale forward. Let's look at the most common objection you will get when working leads. Can you just send me something in the mail? I want something in writing. The wrong way. Argumentative. Well, Mr. Smith, we can't send you anything because we need to get you approved first, and this is a time-sensitive issue. This is an argument. You lose trust. The AAA way is better. Agree. Absolutely. I can mail everything this week. Ask, real quick, is it because you want time to look it over, or is it to run it by someone else? Pause for answer. I can tell you this. The sooner we lock coverage, the sooner your rate is protected, and the sooner she's covered. If you want, we can start with the bronze to get her into the carrier now, and then increase later. Which would you prefer? Attack? Perfect. We'll go with the silver. I'll need to get beneficiary info and payment set up. What's your wife Mary's full name as you want it listed for beneficiary purposes? And do you want to keep Mary as primary beneficiary? Better yet, Omar actually prefers the AA way, which is agree. Absolutely, John. Attack with a condition. You'll get everything in the mail in about a week, but coverage only activates once we set it up. So the sooner we do it, the sooner you're covered. He doesn't ask. He agrees, then immediately states a condition that requires them to move forward now for their own benefit. He closes the loop. The mail is coming, but the benefit, coverage, only comes with action. This is critical to adapt for aged leads. If they've been sitting on the lead list for 6 months, you have to create new urgency. The AAA method does this by giving them what they want, the mail, while ensuring you get what you need, the sale. Strategy 3, the financial and emotional dig. After the initial opening and handling any early objections, you need to qualify the client financially and emotionally before showing prices. First, you need to figure out their financial situation to know what to quote them. Omar, how much would you say you bring in per month? How much would you say you have left over at the end of the month as well? This is where the strategy gets subtle. He notes that if the client makes a high income, he doesn't press them on how much they have left over. Why? Because forcing them to calculate their remaining money makes them mentally put a hard limit on what they can spend. But if they have a low income, say they only make $1,300 a month on Social Security, you have to use the emotional hammer. Omar, if you have so little left over at the end of the month, how do you expect to pay for your funeral expense? This is uncomfortable, but it's a necessary dig. The most common response is, I don't know, I'm trying to save up some money, or I'm going to try to come out of pocket. This is your payoff moment, where you hit them with the bill to pay hammer. Omar, John, I'm sure you would hate to be remembered there as a bill to pay to Mary. Am I right? That line cuts deep. It uses the fear of being a financial burden on their loved ones as the motivation to act right now. It is simple. John is simple, clear, and makes the cost of the insurance feel tiny compared to the emotional cost of being a bill to pay. This direct approach, mirroring, being firm, and using emotional leverage, is why Omar can move through hundreds of leads a day and maintain a high closing ratio. The next strategy for closing the sale is killer. We just broke down the AAA method, the simple strategy for crushing objections. If you found that one strategy alone valuable, do me a favor, hit the like button on this video right now. It tells YouTube that this kind of deep dive strategic content is worth sharing, which helps other agents who are struggling with their scripts. And if you want to make sure you never miss another breakdown of a top agent's playbook, smash that subscribe button as well. Now let's get back to the script and break down the ice cream close. Once you have established the emotional why, that they don't want to be a bill to pay, it's time to move to the how, the application and pricing. Remember, the client is already emotionally bought in. Now you just need to guide them through the process as efficiently as possible. The application flow. Short and simple. Omar emphasizes keeping the application process short and simple because older people do not like being on the phone for too long. Every step must be intentional and lead directly to the close. First, clarify the primary need. John, were you planning on going with a burial or a cremation? Let's say burial. Gotcha. And do you know how much a burial costs nowadays? I've heard numbers ranging from $10,000 to $20,000 depending on the state. Do you currently have anything put aside somewhere for that? Or a life insurance policy? If they say no to existing coverage, you reconfirm your initial goal. Got it. So, I'm guessing the main reason you were looking into this was, of course, to make sure Mary won't have to come out of pocket for your funeral expense. Am I right? This is a close-the-loop moment, tying the financial information they just gave you back to the emotional reason you established earlier. Next, you move into the crucial discount and health questions. Omar's approach here is designed to preempt objections and gather information for underwriting seamlessly. Banking question. Do you use one of those bigger banks like Wells Fargo, Chase, or do you use an app like Chime? This is a soft way of getting banking information. By naming major trusted institutions, you make the client feel more comfortable giving up their bank name than if you just asked, "What bank do you use?" Health and lifestyle questions. John, are you a smoker or non-smoker? Be honest with me, man. Non-smoker. Haven't smoked in 30 years, brother. Got it. And at the time when you were smoking, have you had any breathing complications at all? Have you ever been prescribed an inhaler or oxygen, correct? He then moves into the simplified health questions, but with a warning built in. Have you had any heart attacks, heart failures, strokes, or stents in the last 5 years? No? Okay. Have you had any cancer in the past 5 years at all, John? Are you diabetic by any chance? Currently on metformin or insulin? And how are you holding up with that, man? Notice the intentionality. Once the client confirms they are not on oxygen or an inhaler, Omar locks that in as a win and transfers the authority. I'm glad that we could get this taken care of today, John, just because some carriers don't really accept the inhaler or the oxygen. So I'm glad we could get it taken care of today. God forbid anything else was to happen. He uses the carrier as the gatekeeper, making the client feel lucky and slightly urgent that they are getting approved right now. Strategy 4. The transfer of authority, the MIB report. Before quoting prices, you must set the stage. The client needs to understand that the price and approval are not coming from you, but from a higher authority. I'm going to explain to you how this process works. It's not exactly like you're going to your local grocery store where you just see something you like and buy it. With this kind of thing, we do have to get you approved for it. The carriers will be looking at what's called the Medical Information Bureau, your MIB report. It's a collection of all your medical records, hospitalizations, and prescriptions over the last few years. So it's not really up to me. It's up to the carrier if they would approve you. Does that make sense? This is a powerful psychological move. You are now the client's advocate to the carrier, not the salesperson. After this, you present your credentials, which is legally required and further reinforces your professional authority. Strategy 5. The ice cream close. Bronze, silver, gold. This is the pricing strategy that separates high-volume agents from everyone else. The goal is to avoid the "can I afford it" debate and move directly to the "which one is best" decision. John, based on what you've told me, the system has built in 3 different packages of coverage for you. You can just pretty much pick on which option makes the most sense. Go ahead and write down bronze, silver, and gold for me. After you write those down, let me know when you're ready. After the prospects, lets Omar know that they are ready. He says, "Now pretty much the bronze option is going to cover a full funeral expense. This will make sure your wife Mary won't have to come out of pocket for your funeral. So This is going to be $10,000 in coverage, $20,000 in accidental, and it only comes up to $68 a month. The next one here is going to be the silver option. This one will leave a little bit extra behind to cover any leftover bills, help with inflation, or even leave a few extra thousand behind for Mary. This one's going to be $15,000 in coverage, $30,000 in accidental, and it only comes up to $102 a month. Now the last one here is going to be the gold option. So this is going to make sure Mary is in really good hands. She doesn't really have anything to worry about. And this is going to be $25,000 in coverage, $50,000 in accidental, and it only comes up to $152 a month. Now, John, given these three options for Mary, which one of them fits you the best? Bronze, silver, or gold? Omar's key insight here is that the pricing should be intentional, based on psychology, not just coverage amount. After covering this example, Omar then went on to say that he prefers having a gold option price that is close to the silver option price. He quotes the gold option to be extremely close in price to the silver option, making the upgrade a no-brainer value proposition. Here's the structure. Option coverage price. Psychological function. Bronze full burial expense. $10,000 for $58 a month. The cheap anchor. Makes other prices seem reasonable. Silver leftover bills and inflation. $15,000 for $89 a month. The compromise option. Gold. Mary is in really good hands. $25,095 a month. The value option. For only $15 more than silver, they get $10,000 more coverage. The move is always to ask, now John, given these three options for Mary, which one of them fits you the best? Bronze, silver, or gold? The client is now choosing which policy they want, not if they want one. The force multiplier. Using leads and dialers. Omar is able to make 300 to 400 calls a day, 6 days a week, because he treats his sales process like a machine. He uses a CRM and a dialer to manage his leads, and, crucially, employs offshore telemarketers to act as a force multiplier. It's a simple game when you play it right. I spend $3,000 a week on leads, and I spend about $600 on 2 telemarketers a week. They work behind me, dialing all the leads. His telemarketers are not booking appointments. They are running the first part of the script to generate high-intent transfers. My telemarketers literally only work on the intro. They go through the whole intro, ask for their beneficiary, ask if they're going with a burial or a cremation. They make my leads high-intent leads. The telemarketers transfer the call directly to Omar once the client has confirmed their interest in final expense and their basic needs. This means Omar only spends his time dealing with people who have already said yes to the concept. This is how he typically gets 2 sales before 12 p.m. If you are looking to scale your sales with aged leads, this is the most efficient way to do it. You are leveraging low-cost labor to handle the high-volume, low-intent calling, freeing you up to focus only on the high-intent closing. If you are interested in getting the best prices for the best leads in the industry for aged insurance leads, be sure to contact Stellar Prospects. Plus, we can get you set up with an English-speaking telemarketer in the Philippines to send you high-intent live transfers for $5 an hour. So reach out to us today for more information. See contact info in the description. Next, we are going to cover the post-sale upsell and the mindset of a 100K agent. You've mastered the intro, handled the objections, and closed the deal using the ice cream method. Most insurance agents stop here. Omar doesn't. He views the first sale as the start of the relationship, not the end of the transaction. Here are the 2 high-leverage moves he makes after the client has verbally committed to the policy. Strategy 6, the post-approval upsell. The client has chosen their bronze, silver, or gold option. You've collected their information, and the application is submitted and approved. They are relaxed, relieved, and have just mentally committed to a monthly payment. This is the moment of highest trust. This is when you use the approval as a lever to increase the coverage. John, I have some great news. You've been approved for the coverage we discussed, and we're getting that set up right now. By the way, because of your health profile, you were also approved up to $50,000 in coverage with the carrier. It only came up to, let's say, $220 a month. We could also increase that with a click of a button. Does that make sense? He doesn't ask if they want it. He presents it as an additional benefit they have earned through the approval process. He reports that about half of his clients take the increase. Think about that. A 50% success rate on increasing the policy premium after the sale is done. That is free money on the same lead. Strategy 7. The secondary spouse close. Just like the coverage upsell, you wait until the end to close the spouse. If you ask at the beginning, it can feel greedy and damage the initial trust. At the end, after you have secured their coverage and established trust, the question is seen as a helpful, protective measure. John, it looks like your wife, Mary, also does qualify for something like this. Does she have anything in place at the moment? If they say no, the path is clear. Perfect. Let's also look at some options here for her as well, just to make sure she's protected. This is how you turn one high-intent aged lead into 2 sales, effectively doubling your income from that call. The mindset, chasing the number 1 spot. All the script tactics and psychological levers mean nothing if you don't have the work ethic to back it up. Omar's success, the $580,000 earnings so far this year, including the recent $100,000 in earnings for 1 month's production, was driven by an intense focus on volume and competition. He talks about a competition in his agency called March Madness, which was a bracket-style contest where only the top producers in the company competed. He wasn't just chasing the $5,000 prize, he was chasing the title. I stayed longer than everybody. I made more calls than anyone. I took rejection after rejection after rejection. I still kept going. During the final week of that competition, he produced $45,000 in 1 week. The lesson here is profound. Intentionality is a volume game. You need a bulletproof script, but you need to run that script 300 to 400 times a day. The force multiplier. How to replicate the volume. The only way to hit those call numbers with aged leads is to build a closing engine that filters out low-intent calls. This is where the telemarketers come in. Omar uses a couple of offshore telemarketers who work directly for him through a dialer system, making the initial 300-400 calls daily. One telemarketer is full-time and the other one part-time. Their entire job is to run the first part of the script, the intro, the burial or cremation question, and the beneficiary check, to generate a high-intent transfer. When the telemarketer gets a qualified client on the phone who is ready to talk about the options, they simply transfer the call directly to Omar. This means for these live transfers, he is only spending his time on calls that are 80% of the way to a sale. If having a telemarketer making calls for you sounds appealing, you can get an English-speaking telemarketer through Stellar Prospects for $5 an hour. If you are a solo agent or running a small agency, this is the force multiplier you need to scale your income. You can purchase aged leads at the best prices through Stellar Prospects, and you can leverage English-speaking telemarketers to handle the high-volume dialing. This is not a complicated game. It's a simple game when you play it right, with the right script, the right mindset, and the right system. If you would like to get the info and script covered in this video, be sure to comment Omar below and list what you liked or didn't like with Omar's approach. Again, comment Omar below and what you liked or didn't like about his approach, and we'll provide you with this document. Also, if you are serious about implementing this system, getting the best prices on aged insurance leads, and setting up English-speaking telemarketers from the Philippines for $5 per hour, reach out to us at Stellar Prospects for more information about how to build your closing engine. You've just seen the full breakdown of Omar Elsayed's $580,000 system. You now have the hammer script, the aggressive, intentional way to close every lead. But what about the leads that are cold, hesitant, or need more convincing? You need the consultative strategy to handle those clients without losing trust. Peter Roberts, another top agent, made over $400,000 in his first year using a completely different approach, a 3-question framework that disarms prospects and builds trust before you even drop the price. Now that you've learned the hammer script, click the video on your screen to get the consultative strategy for the perfect 1-2 punch for aged leads. Click the video on your screen right now, and I'll see you over there.